3 months ago, I gave $10,000 of my own money to an AI investment platform. It made trades that no human, including me, would ever dare. Some of them work. Some, well, you'll see by the end of this video, you'll know exactly if letting AI run your investments in 2026 is genius or just plain crazy. 0-30 setup, the AI investment challenge. So who am I? Just a regular investor, mid-30s, living in Chicago, decent job, but definitely not a market genius. I've dabbled in stocks and ETFs since my 20s. Sometimes made money, sometimes not so much. I've used robo-advisors before, but what's new in 2026 is that now real AI, not just an allocation tool, but an engine that scans the whole market, reads the news, picks trades, is everywhere. The tools I picked: Fidelity AI Wealth, Q.ai, and Betterment AI.
All of them promise pro-level investment decisions, analyzing global news and economic data at insane speed. Some even build custom model portfolios in real time. I transferred $10,000 into a fresh Fidelity brokerage account, hooked it up to all 3 AIs in separate sub-accounts, and hit go. The challenge: let them buy, sell, and rebalance exactly as they wanted. Zero human intervention. But what did I risk? Losing a chunk of my own cash, all while my friends texted, "Are you sure this is safe?" 200 rising action. The experiment begins week 1, day 1. I wake up, check my phone, and immediately things are moving. Fidelity AI Wealth went 35% into tech ETFs, 25% into energy stocks, and 10% into Bitcoin ETFs. I never owned crypto in a traditional brokerage before. Q.ai, on the other hand, did something wild. It bought a bunch of UK dividend stocks and shorted a meme stock that's been trending on YouTube. Betterment AI, total opposite. 60% cash, no joke. Its risk model flagged elevated volatility and sat on the sidelines, just collecting tiny yields. Every morning I checked, and every day the bots shuffled the deck, sometimes moving 2-3% of the portfolio, sometimes going all in on swings I never would have picked. I tracked every single trade, recorded gains and losses even when it hurt. But after week 1, something weird happened. 400 complications. Unexpected twists and AI fails. Here's where it gets interesting. Remember how Betterment AI was hoarding cash? That week the S&P spiked 4% and tech exploded. My portfolio missed almost all the rally. Meanwhile, Q.ai short bet on that meme stock backfired, lost $160 in a single session before it closed out. But then the other shoe dropped. Second week the market wobbles, inflation data comes out higher than expected. Suddenly Fidelity AI Wealth dumps half the tech ETFs. But instead of running to bonds, it pivots hardcore into commodities, copper and lithium mining stocks. I'm staring at my phone thinking, is this even legal? The most human moment, watching AI make a call I never would. Q.ai put 5% into Brazilian solar company after scanning positive headlines. Winner for 2 days, then a negative credit rating hit. Down 8% in 48 hours, the emotional part. Realizing these trades were happening instantly, faster than any person could react, and sometimes that's not a good thing. But what happened next changed everything. 600 climax, results revealed after 30 days. Here are the numbers. 0 BS, actual screenshots below. Fidelity AI Wealth up 19% net after fees. Big win. That copper ETF up 7%. Miss, tech got stopped out early. Missed most of the late month recovery. Q.ai flat, literally plus 2% for the month after the wild swings. Several losses offset the one big win. That UK dividend ETF up 1%. Betterment AI ended plus 5%, mostly from high interest cash. Played ultra safe but definitely didn't lose sleep. But the real surprise is coming. Out of all 3, none beat the S&P 500, which was up 3% in the same window. The bots kept me out of big losses but also buffered the wins. Why does that matter? Because most AI right now is programmed for risk management more than moonshot gains. And that's what 99% of platforms aren't telling you. 700 resolution. What did I learn? Here's the honest truth. AI investing in 2026 is powerful, fast, and way more sophisticated than anything from a few years ago. And it's but it's not magic. There's always a trade-off. AI's best feature: emotional detachment. No panic selling, no FOMO, but it can be overly cautious. Or take calculated risks that don't pan out. If you want wild upside, you'll need to tweak risk settings or accept that AI alone won't 10x your money
Overnight. What you will get is disciplined trading, less stress, and fewer catastrophic mistakes. If you're enjoying this, hit subscribe. We post stories like this every day, and you don't want to miss the next one. We're putting every major AI investing tool to the test, results and all. So was it worth it? For me, yes. Beats emotional trading. For sure. Would I hand over my entire net worth? Not yet, but as part of your portfolio. That's the smart move in 2026. Not financial advice, just what happened to my real hardworking dollars. Subscribe and hit the bell. We drop new AI investing results every single day. The next story is even crazier. I let a robot rebalance my crypto portfolio for a month. You won't believe what happened if you like this. Watch our next video. Best AI ETFs 2026 reviewed. Do any beat the market? It's a wild ride.